The broadcast is now starting. All attendees are in listen-only mode.
Hello, and welcome to today's webinar, Industry Experts Guidance for Nonprofits on Business Resources Needed to Navigate COVID-19, presented by our sponsor, Heffernan. We're so happy you can join us. My name is Deb Beto, and I will be your moderator today and be monitoring questions you may have during the session. Before we open up the session, let's review a couple of key items. All of the webinar materials we discussed today can be found in an email when I follow up after the meeting today. I will be sharing all of this information in a follow-up email, so don't feel like you're missing out on anything right now. If you have trouble with your internet connection during the webinar, we recommend leaving the presentation and logging back in. If you have audio difficulties or a telephone line goes dead during the call, hang up and call back again to the same number. If all lines go dead, watch the on-screen chat box for an alternative call-in number. Please feel free to ask questions or provide feedback by using the chat box or questions box during the webinar. If you are using a tablet, you may need to tap on the screen for the options bar to appear. And then you can select the appropriate option. We may not respond immediately, but we will try to work your questions or feedback into the end of the presentation. If we can't get to your comment or question during the session, we will be online afterwards to respond, or we may follow up in an email if we run completely out of time. You may also email us at moderator@aspenrmg.com for up to 48 hours after the webinar. This will be a 1 hour and 15-minute presentation. Questions and comments are very much encouraged throughout, and the presenters will be answering questions at the end. And lastly, we have a number of webinars upcoming covering a variety of topics, including those listed at the Heffernan webinar website. In addition, we offer the mandatory Preventing Harassment training in English 3 times a year. With that, let's begin today's webinar, Industry Experts Guidance for Nonprofits on Business Resources Needed to Navigate COVID-19. We have a panel discussion today from 4 different companies. From Heffernan Insurance Brokers, we have Senior Vice Presidents Steve Parkhurst, Janie De La Rosa, and Melanie Conti. From the law offices of Gordon Reese, we have partner Hugh Williams. From BBVA USA Bank, we have Senior Vice President Paul Duran. And from CFOs to Go, we have partner Chris Burns. So we are going to make sure that Steve is ready to go and have a great session, everyone.
Thank you, Deb. This is Steve Parkhurst from Heffernan. First, I'd like to thank everybody for joining us on the call today on this beautiful Friday morning. I hope you and yours are all staying safe and healthy out there. We've been in SIP for some time now, so I'm going to go semi-quickly through some of my information that you may have seen over the past few weeks, focusing mainly on the new information and allowing time for the other presenters as they've had more information come out recently that we'd like to cover today. So to start, we're going to talk about the virus, believe it or not. So in 2003, when SARS had its outbreak, that resulted in many policies and carriers adding virus and bacteria exclusions to their policies. This excludes business income coverage from your policy, as some of you probably know at this point. This will probably change as there's lots of higher powers and relief and support trying to come for businesses. We're trying to see where, and everybody's trying to help out. So this could easily change. We are suggesting that we all be very prepared, and I'm going to say this multiple times today, but document everything, over-document. So for one, a business income worksheet is important. Most carriers will have one that they prefer, or your broker may have one as well, and you can reach out to them at any time for one of those. Keep track of all your expenditures during the shelter in place. Another thing we'd like to make you aware of is a vacancy clause. Many property policies have a vacancy clause. These range, or I should say, these are typically 60 to 90 days. And if your building is vacant for that period of time, your policy won't react. So just check in with your broker and your carrier. If this is in your policy, I would say almost all carriers, but a great majority of carriers are allowing this to be overlooked and removed to support the businesses out there that are having some troubles today. On April 13th, the commissioner came out asking carriers to return premium, and our phone started ringing off the hook, as you can imagine. This was a statement that will carry through. However, it's 60 days for every carrier to put a plan together and share it with the commissioner. Then they have 60 days to implement that plan. So August 2020, 120 days from the bulletin that was released, is sort of the drop dead for the carriers to react. I personally believe that this could change too. For instance, Heffernan is appointed with over 760 carriers. If 760 carriers come back with different plans on how to reduce premiums and exposures and supply some credits for our insureds, it'll be really hard to manage all those plans. So I would be very surprised if there wasn't further direction on this from a higher power or someone else. Just this week, Governor Newsom on Cinco de Mayo, as a matter of fact, signed an executive order sort of changing the way that we're looking at employees contracting the virus now and if it's covered. So previously, the onus was on the employee to prove they had it at work. This takes that and spins it 180 degrees. Now it's on the carrier to prove that the employee did not pick it up at work. Also, the WCIRB had come out with some recommendations. These recommendations are going to a hearing by the Department of Insurance. I believe it's on May 18th. It's sort of just a formality. We believe these will be passed pretty easily. Those three factors are COVID-19 claims will not be in the experience rating, which is good to keep that down. Payments for those who continue to be paid, or excluding payments to employees who continue to be paid while not working, since the exposure is not there. And also allowing those employees that are working from home to be assigned into classification 8810, which ideally would be less expensive. These are all in the benefit of the employer. Also, just a side note, but an important one, OSHA now requires COVID-19 to be a recordable illness. So make sure you record it should you have one in your organization. A couple other items just to touch on quickly on the property and casualty side. Cyber risks are increasing quite a bit. The exposure's increased with everybody having many meetings and happy hours and communication in general from home via Zoom or other platforms. So check your limits, make sure you have cyber. If you don't have a cyber policy in place, I highly suggest you get one, at least get a quote to kind of see the pricing and know your option there. The cyber exposure has increased and so have the claims that are coming in cyber. We mentioned the temporary business closure and the vacancy clause. Something we want to mention on policy renewals, make sure that you check your policies to see if there's any added coverage restrictions. Also, make sure you are, when you're quoting your exposures and giving estimates on payroll, revenue, whatever it may be, it's okay to not get super aggressive and put a lot of growth on there. Some of these policies are not auditable, and there is a lot of uncertainty on where these numbers will land. So have that discussion with your broker and be on the same page about how you're going to put these estimates together. With a lot of uncertainty, it's really hard to come up with accurate estimates in this environment. Again, document. We've sent out some telework agreements, incident reporting for employees working at home, and I've had questions on what sort of format should we use. I think in terms of documenting anything for the numbers, I think Excel spreadsheet, where there's no formal request the carriers are having on how they want information and exposure changes given to them. So just having that information in any way right now is the important thing. So what we do know is there will be a new normal. The times they are changing. We have different concerns than we had a few months ago. We have new technology coming out. We have different safety regulations and guidelines in work and in public that we will be following in the future. Personally, I'm really wondering how Disneyland is going to look after this, and I'm not sure when I'll be able to find that out. So with the new resources coming out, we have antibody testing companies to find out if you have had the virus, not if you currently have the virus. These are new companies, and the FDA has approved more than there were in the past because of the supply and demand. So these are new companies. They pull from local nursing pools to get the nurses to conduct the blood draws and the tests. These companies are new, so there is some fine tuning that needs to be done. Normally these costs are picked up by your insurance, your health insurance benefits carrier. $75 for an initial blood test, $100 if they need an additional test. There are one or two carriers or health benefit carriers that are doing their own thing, and so check with your carrier and your broker regarding these tests. Regarding new resources and services, again, we have a application for your phone. This application quickly puts the temperature check into the forefront of the platform, which it wasn't before all of this happened. The initial comments we hear seems a little bit like Big Brother, and that's true. Different companies will take different approaches on what they want to check, how they want their employees to feel safe in the workplace, and how they want the employees to come back into the workplace. So this is one of many that we had an introduction to, and we'll be vetting them as they come out. But keep an eye out. There will be a lot more resources and services available. On that note, I'd like to pass the baton to Janie De La Rosa. Janie is a leader and a manager in our Heffernan Health Benefits Division. Janie, take it away.
Good morning, everybody. Thank you so much for attending the webinar. I wanted to touch on a few reminders and updates on the health insurance carrier side. Steve, if you could please flip to the next slide. So in terms of group health carrier responses and some of the areas that they actually have sent out for reminders, wanted to just go over the premium and billing and some of their leniency that they're having in that area. Some carriers are providing leniency by extending grace periods or allowing payments to be delayed. That's really helpful for, it's been very helpful for a lot of our nonprofits. And we've been able to get 30-day grace periods extended to 60 days or 90 days. Some of the other exciting news that we've received recently is that ancillary carriers, which is the non-medical carriers, they're releasing renewals with no increase. So this is the first time in our industry where we're getting a blanket no increase, no rate increase for our clients. As an example, for those of you who have VSP, Vision Service Plan, they just issued a rate pass to all renewals between 8/1/2020 and 3/1/2021. And with that rate pass, they're given a 2-year rate guarantee. So again, that is, this is quite unusual for the group health space, for a carrier to say, I'm not raising your rates if you renew from 8/1 to 3/1/21. And in addition to that, I'm going to give you a 2-year rate hold. So that's very exciting. And I know there are other carriers that are doing that. In addition, a lot of the ancillary carriers are also issuing automatic premium credits. So those are looking anywhere between an automatic 5% to a 50% premium credit. And then that's showing up in your billing statement. So I know that there have been some carriers that have issued that in August bills. So keep an eye out for that. Just wanted to also remind everybody that your Paycheck Protection Program, your health premiums are eligible under that. So you can pay your premiums with those expenses. And then there are some special mid-year changes that have come out. So most carriers are allowing a one-time change to your plans or contributions mid-year. to help with the financial burden that you may be experiencing. So if you have maybe you want to downgrade your plan, or you want to change the contributions with your employees, the share, you are being allowed to do that at least once a year, depending on the carrier that you're working with. And then the other thing under the special mid-year changes is just a reminder that the furloughed employees that you may have furloughed can stay on the plan. So even though they're not coming to work every day, you can continue to pay their health premiums and they can continue to be covered. So one of the last things on this slide is the new COBRA extensions, and these came out recently. You may have received a bulletin from us. But basically, this is saying that during the outbreak period, which started on March 1st, that there is an add-on for the election of benefits in a COBRA event of 60 days, and a 45-day grace period is extended on anybody that's currently on COBRA and wants to continue their COBRA. They're being given another 45 days to pay that. So there's definitely a lot of turning points to this new regulation on COBRA. So I urge you to look at our HR alert, or maybe go to Cal Chamber and get the definition of how all of this works, or we can provide it. So that is the latest on the COBRA. On the next slide, wanted to just give you a few reminders on the benefit modifications. So as you know, testing for COVID-19, that's all being covered at 100% as directed by your physician. There is a new antibody test that just rolled out. I believe it was yesterday. And so most carriers are going to reimburse or cover that expense. Steve mentioned it earlier. It was $75 for a test to see if you were exposed to COVID-19. So that test typically will be covered by your insurance carrier. However, please note that if you have Kaiser, Kaiser is not covering that test outside of Kaiser. They are developing their own test internally and are hoping to roll that out as soon as possible. But in the meantime, if you would like to take that test, there are several labs, as well as Heffernan can arrange to have nurses come out to your office and test all of your employees. Wanted to also remind everybody that telemedicine has no copays. Doesn't matter if your employees have a high deductible plan or not, they still have no copays. And speaking of high deductible plans, there are no deductibles in a COVID-19 help situation. So $0 consultations, $0 payments if you have to have any kind of testing or medical services provided if you are diagnosed with COVID-19. Also wanted to remind everybody that you can also cover costs, and FSA and HSA contributions have also changed a little bit with more flexibility. So those are all areas that you can take advantage of and have been around for since about April 1st. Okay, so now with, I want to thank you for your time. I'd like to now introduce Hugh Williams, who is a partner at Gordon and Reese, and she's going to speak with you about employment issues during the pandemic. Hugh?
Hi everyone. Thank you for that transition. As I mentioned, or as Janie mentioned, my name is Hugh. I'm a partner at a law firm in San Francisco and in Oakland. Make sure at the end there's my email address. If you have any questions that aren't answered, if you have additional follow-up questions, just feel free to shoot me an email and remind me that you were attending this seminar or that you work with Heffernan. So some of the issues that are confronting employers right now is that a lot of the workforce is now shifting to remote. And then now you're having employees come back into a different workplace with the risk of the coronavirus. And then there's new laws. And then a lot of employers are faced with making tough decisions with downsizing, whether, to do layoffs and furloughs and how to implement those and when. So I'll be covering those issues very quickly. And I apologize for being so brief, but I want to leave time for the additional 2 speakers after me. So with shifting work to remote and having everybody work from home, or most folks work from home who can, one of the hot topics that the legal industry thinks that there's going to be a lot of lawsuits coming after this in down the road in the next year or so are meal periods and rest break violations. So think class actions or even individual claims. So what you can do to avoid that is you're having a workforce work from home. They're pretty much self-policing themselves or setting their own schedule, but you want to do everything you can as an employer to set yourself up for the best defense in case there is a lawsuit. So I recommend distributing written policies regarding break compliance, reminding them that they need to take a 30-minute meal period. They need to, depending on how long they're working, but if it's a typical 8-hour shift, 30-minute meal period, and 2 10-minute rest breaks, and the rest breaks are paid. Send email reminders. It could be something really generic, something I can help you write, that reiterate that it's the employee's responsibility to take these breaks. And you can preface it as, you want your employee to take care of themselves. And oftentimes employees who are working from home tend to work more than they would if they were in the office. Again, this depends if they have kids and if they're homeschooling, but they're more likely to work through lunch, more likely to work, log back on after their kids have gone to bed. And that could be really, really bad for employers if there's a potential wage and hour claim. There are free and also paid software apps that can assist with break management that'll remind employees, hey, it's time to take a break, that you could look into and invest in. And as an employer, you also want to audit time records each pay period to the extent you can, and immediately address any concerns or pay penalties, because you owe an employee 1 hour of pay for every meal period or rest break missed in a day, with 2 hours pay as the max. And then there's waiting time penalties on top of that if you should miss paying those penalties. Another big issue is off the clock work. If you have non-exempt employees who are clocking in and they're working a quote 8-hour shift, and then like I said, they might work through lunch even though they're clocking out and then clock back in, or they clock out for the night and then log back on after their kids go to sleep, or maybe they're checking email here or there on their phone. All of that, if they are a non-exempt employee, is called off the clock work, and that's not allowed. Obviously, that's illegal, and an employee can't even volunteer to work off the clock. So, and that's easily provable if someone were to bring a claim. Now with metadata and computer and logins and passwords, an employee or even a former employee can easily prove that they worked off the clock by showing how many times they responded to an email or that they logged on to the server. And so that could be a huge potential liability exposure. And insurance, I think, for wage and hour claims is very expensive. So the next big issue is expense reimbursement. Again, you have employees working from home and employers responsible for offering a reasonable reimbursement or stipend to cover workplace expenses. So that includes cell phone, internet, and even if that employee already had their own cell phone and already had their own internet, the employer still must provide a reasonable amount for reimbursement. You should also consider providing loaners or purchase reimbursement when there's a use of personal laptops, tablets, or computers if you're requiring it for work. The employee can say that they're losing value or that the employer is requiring them to use their personal equipment. And Steve touched on this, cybersecurity and confidentiality issues. This is huge, and I strongly encourage you to look into policies and getting quotes for cybersecurity, especially in this era where a lot of private information is being passed back and forth. And now an employee is working from home. We don't know how secure their Wi-Fi is, if they're using a public Wi-Fi or a hotspot. So you want to do the same thing, document your efforts. You want to update and communicate acceptable use policies for employees for using home computing devices. For example, that their computer systems need to have passwords, their Wi-Fi needs to have passwords. They shouldn't be letting their children or spouse use their computers or laptops, although I know that probably happens, especially in families where there's only one device, but still communicate to them that that's the expectation is that they don't. You want to the extent you can, provide training on detecting and avoiding elevated phishing threats, to not respond to those email requests for funding for Nigerian princesses and princes. And the new one is that there are these new COVID scams where they're pretending to be the IRS or they're pretending to be some sort of legitimate government entity, and then clicking on links that are now, creating viruses and exposing your company information to whomever, the bad guys. Next slide, Steve. Another thing is when you're shifting to remote work, you want to look at performance management, setting expectations clearly. If you're changing their job duties, make sure it's in writing. If you're changing how much they're getting paid, if there's a pay cut, make sure that's communicated. And make sure that you're holding employees accountable, that there's goals and timelines that you're communicating to employees. So I'm going to skip ahead just because there's more important information I want to make sure we cover while leaving time for the next speakers. So now you're bringing employees back. These are some of the main questions. May an employer send employees home if they display COVID-19 symptoms? Yes. The CDC states that employees who become ill with symptoms of COVID-19 at work should leave the workplace immediately. Employers have an obligation to provide a safe workplace. Employers can ask employees who exhibit COVID-19 symptoms to go home. The employer should, if you're sending them home though, the employer should provide sick leave or try to compensate employees under paid sick leave laws. If paid sick leave is exhausted, you can ask them to use their vacation or paid time off, and worst case, do unpaid leave. Next question. During a pandemic, how much information can an employer ask from an employee who's reporting feeling ill at work? So you can ask them questions that are limited to COVID-19 symptoms. So be very specific and ask them, are you experiencing a fever? Are you experiencing a dry cough? Do you have fever, chills, sore throat? Those things. But you shouldn't be asking them anything other outside the scope of a COVID-19 symptom, because you would run, potentially afoul of a HIPAA violation or privacy concerns in the workplace. During a pandemic, may an employer take employees' temperatures to determine whether they have a fever? And this is a new circumstance. So yes, generally measuring an employee's body temperature can be performed in these limited circumstances. So you can require that before they come on property or at any point during the workday. During a pandemic, may an employer ask employees why they've been absent from work if you suspect it's for a medical reason? Yes, you can definitely ask it. Again, you want to tread very carefully and not run afoul of disability discrimination laws, and ask, again, what symptoms are they experiencing? Can they tell you about them? And if their absence was related to it, and document these conversations. You don't want to have to go back if there is a lawsuit for disability discrimination or failure to provide a reasonable accommodation that there's a dispute and if you're going to rely on your memory or a employee said, employer said situation. And the last question is, what information can an employer reveal to employees about employees' COVID-19 status? Say someone's been exposed, someone says they now have contracted the disease. Employers should never identify who the person was who came to them, but they do have an obligation, again, to inform other employees that an employee has come to you and is experiencing these symptoms or has been exposed to it, and provide that information so that employee can decide what they should do for their safety and security. Okay, and that's an email that I can look at if you need help drafting it. Next slide. Moving to layoffs and furloughs, what's the difference? A furlough, more or less, is an unpaid leave, and that the employee is still an employee, still on your books, still receiving benefits, and they have not left your employment relationship. And if they go and work for a different employer, then they should sever the relationship with you. A layoff is a permanent separation, and if you're considering, whether it's a furlough or a layoff, I recommend that you document, again, a theme that has been reiterated throughout this presentation. Document the factors that you consider. This will help you potentially defend against claims of discrimination and retaliation, whether it's based on seniority, whether it's poor performers, whatever metrics you're using as to why you're laying folks off or who you're bringing back, for example, that'll help you defend against these claims. Think about timing, what works for your business, and then keep in mind that if you lay off an employee, you need to pay out any accrued vacation. And then you think of the opportunity as an opportunity to potentially offer severance agreements to get employees to release any and all claims that may have incurred during their employment relationship with you for a nominal amount. If you think you have a problem employee that might come back and sue you, it's worth considering offering a severance to get that release. Next slide. This slide, basically reiterates the Families First Coronavirus Response Act that generally employers, if you have active employees and you have less than 500 active employees, meaning they're not furloughed, that you have an obligation to provide 2 weeks of paid leave and up to 12 weeks of paid sick leave for certain qualifying reasons. And I can, again, in the essence of time, I won't go through them. And I believe that these are my last 2 slides. Steve, next one, please. And here are the qualifying reasons for a leave. Notice shelter-in-place order is a valid reason. If someone's kids can't go to school and the employee needs to stay home to take care of them, or the employee needs to stay home to take care of another individual because of COVID-19 symptoms, this is when that leave would come into play. And then next, I'd like to hand it off to the next speaker. It's Paul Duran. He is Senior Vice President at BBVA. Thank you, everyone.
Thank you, Hugh. Thanks, everyone. Thanks, Heffernan, for allowing me to spend a few minutes with you to talk about some of the things that the banks are doing with the Paycheck Protection Program. And I'll touch upon EIDL. The good news today is that we thought at this point we would be out of funds. According to the news articles as of yesterday, there was still about $100 billion left in round 2. So there is some money out there, and you're probably going to have to look around for a lender to submit the application, simply because a lot of lenders are at capacity. There has been an unprecedented demand for this product. So the Paycheck Protection Program, in a real simple overview, it can go up to $10 million. It's the 2.5 times your average monthly payroll. And there is a computation you want to do here on the 2.5. I'll touch upon it briefly, which is what is your gross payroll and what did you pay? I usually use a 2019 amounts of what was your gross payroll, and then you take out what amounts over 100,000 that were cash compensation. You then look at the health benefits, as Heffernan mentioned, and what is the employer's portion of that? What do they pay? And you're looking at retirements. That's kind of going to give you your gross payroll amount divided by 12. That's your monthly, and you times 2.5. That's just in a nutshell. So one of the things is that this program is attractive because there's no guarantee, there's no collateral, this is unsecured. It has a 1% maximum interest rate. The other nice feature is that on amounts that are not forgiven, it has this forgiveness feature. The payments are deferred out for 6 months, so you don't have to pay till 6 months later, and it's termed out over 2 years. And the fees are not charged to the borrower, the government is paying that. Next slide, please. Steve, can we get the next slide on that? Yeah, so this is just briefly some qualification criteria. Really for nonprofits, generally pretty straightforward. And then the next slide. Make sure. Okay. So there are some uses that you're going to look at. It's payroll, and as mentioned, healthcare benefits, rent or interest on mortgage payments. 75% of the proceeds have to be used towards payroll, and then the remaining 25% when you're calculating the forgiveness piece, which Chris will talk about. And interest on any debt. Next slide, please. I'm going over it rather fast, and we can get into more specific. The second program that a lot of people use that the banks don't really get involved, you do have to apply to SBA, is the EIDL, the Economic Injury Disaster Loan. This is the typical loan that the SBA and the government would roll out into an area that had been hit by a hurricane, earthquake, some natural disaster. They just made it nationwide. It is a loan. And in theory, it is supposed to go up to $2 million. As of yesterday, the amounts earlier this week got capped at $150,000 right now. It has a $10,000 advance feature, which again, the amounts that are being approved anecdotally, I'm hearing very low, $1,000 per employee. The nice part about this is that it's a long-term amortization of 30 years. And again, it is administered by the SBA. You have to go in to the SBA website and apply. Right now, I'm understanding that they're not really taking applications, that it's just been limited to a few agricultural companies. They had a tremendous backlog, so their window's been opening and closing, and so one of the things you have to do with these programs is just kind of keep in touch with them, review news articles and things so that you can see what's the latest. This does have personal guarantees. The nice other part is that the deferral on the payments is 12 months. So the next slide. Steve is, okay. So I was trying to really just rush out some notes here, and anyway. But one of the things about these programs, the consistent thing has been change. We are, the guidance continues to be given on the PPP loan, even though money's out. So we have seen after round 1 and into round 2, different kinds of guidance coming from the SBA and the Treasury. Initially, they came out with a new guidance that said if you really can't use the funds or you had other sources of capital, you had to give it back this week on May 7th. May 7th comes, that got extended to May 14th. Not really an issue for nonprofits, but there has been some deductibility issues being discussed on use of PPP proceeds to pay expenses, something for people to look into. There's also, and Hugh would probably be a better topic on this, is that particularly within restaurants, it's been getting employees refusing to return to work. With the bonus, they have a bonus unemployment compensation. It's putting the unemployment over what they would normally earn at work. So some employees have been refusing to return. And this is creating a real problem for people who have the PPP. There is some evolving guidance there. And that's why I say you really want to check with your advisors. If it's possible to get some guidance on eligibility, the forgiveness piece, because we just don't know quite what's going to happen next. So it's always, like I said, the thing that is constant in this program right now is change. You'll hear me talk, what I would said last week, this week, and probably next week are going to be different. So I really suggest that people talk and just find out what's going on. When I wrote this, I thought round 3 was a potential. I'm not so sure. I'm not leaning towards it anymore because we do have the $100 billion in availability. And they're also looking at doing some other things with employee retention credits and everything. So if you are thinking about PPP, I would start looking at it right now. The next slide. Okay. So next up, I'm only mentioning this briefly. This is not a great deal of detail. This is a very complicated program. It's called Main Street Lending. It is mostly for corporations. There has been rumblings of something coming out for nonprofits of a similar nature. This is a loan. It's going to go to a higher employee accounts, higher dollar amounts. Minimum loan amounts are much higher. PPP didn't have any minimum loans. It's something to be aware of. This is evolving again. Guidance is starting to come out, not final. So something just to keep listening for. And with that, I think the next, we'll go into Chris's slide. Chris is a partner with CFOs to Go. And he's now you've got the PPP loan. What do you do with it? And that's what Chris is going to tell us now.
Great, thanks, Paul. So as Paul said, if you haven't submitted a PPP loan application yet, there are still funds remaining. You will need to check with your bank to see if they still are accepting applications, but if they're not, you can go to the SBA or to an advisor and find alternative lenders that are still funding, still accepting applications and funding these PPP loans. And you should do so quickly because we believe that the remaining $100 billion or so will run out quickly. And we believe that there will be more coming because there are going to be still millions of small businesses that didn't get a chance to get in the queue for this current round because their own banks ran out of funds. So if you submitted a PPP application and it's been fully funded or have been approved, it's time to get a jump on the loan forgiveness portion of that process. We believe that most banks do not have the systems and the processes, much less clear direction from the SBA on the extent of their role, the bank's role, in the loan forgiveness. So we recommend that you start preparing your loan forgiveness documentation support now. So here are some questions and answers about the loan forgiveness. So what exactly will be forgiven? but will be forgiven are the 8 weeks of payroll costs, benefits, and state and local taxes that were used to calculate the loan in the loan application process. And you can use 25% of the loan to forgive additional non-payroll cost expenses such as business rent, mortgage interest, or utilities. So many people are wondering whether or not the loan forgiveness can be reduced and why. Well, the PPP program was designed to help employers retain their employees, or if they laid off or furloughed their employees, to help bring them back and restore their baseline headcount by June 30th. So the baseline headcount is one of two different data points. Either the full-time equivalents headcount that you had between January and February this year, or between February 15th and June 30th last year. You want to pick whichever is lower as your baseline that you'll compare against. If you restore your headcount by June 30th, that may have been laid off or furloughed, then you will not have a further reduction in the amount that is reduced or that is forgiven. Also, those employers that reduce their employees' salaries by more than 25% will need to restore salaries at least above that 25% reduction by June 30th, or they will also be subject to a reduction in the forgiveness. So what exactly are the reports that are going to be required by the banks and the SBA to accept and support that loan forgiveness? Well, it seems pretty simple on the surface that payroll reports from your payroll provider will need to be provided, as well as invoice and payment records for all benefits. Next slide. So this slide highlights some of the tactical components of assembling your PPP forgiveness and support from your bank. So at CFOs to Go, we've continued to develop significant subject matter expertise in all of the PPP requirements, and we're staying on top of the forgiveness requirements and guidance as well. And it's, as Paul said, it's changing. It's the only constant here. It's changing day by day. So, you know, the 8-week period of loan forgiveness starts the day that your PPP loan is funded. So we recommend using your systems to help you track the PPP forgivable expenses. There are several ways you can do that with project codes in your general ledger, and many other ways that you can segregate out your expenses that you want to put in a bucket that are associated with the forgiveness calculations. You'll need to be providing this information and support to your bank. So all major payroll providers are building tools so that you can get the payroll coded to the PPP forgiveness calculations. You need to make sure that when you're calculating the payroll costs, that you limit each individual forgivable compensation to $15,385. That's equivalent to the $100,000 per year annual cap that went into the original PPP loan application. So you want to segregate, code all your forgivable expenses, and put it in a package. It sounds easy, but you need to make sure you're organizing and retaining all of your invoices and proof of payment of all of those expenses as well. But although the guidance isn't clear yet on this, we believe that you're going to have to extract the specific 8 weeks expenses that will be incurred. And those are going to be incurred over multiple pay periods and multiple payment periods for your other expenses. And so you're going to have to be taking a couple weeks from this payroll period and a couple weeks from that, and it could be very difficult. Well, we pivoted to develop a service offering that will provide clients a crisp documentation support package for their banks, and have developed an application template to do the challenging calculations and be in compliance with the guidance. Like the loan application and the initial funding itself, we believe that small businesses that are ready with their loan forgiveness documentation packages first will be forgiven first, because they'll also be helping the banks in providing a very clean and crisp audit-ready package. Next slide. So we've talked about the PPP program and the EIDL program, and some of you may be wondering whether or not you can apply for both. Well, assuming you can still apply for the EIDL program, and those appropriations are now being restricted, we think, to agriculture companies. But assuming you were already applying for an EIDL, you can also apply for the PPP program. You just cannot use the proceeds for the same needs. But in addition to these programs, the SBA is offering several other programs associated with the CARES Act, as well as other SBA debt relief and programs that were put in place. So those include the employee retention credits, which are another set of credits that were designed to help employers retain their employees. And employers are eligible for up to $5,000 credit per employee this year, but employers cannot take those credits if the company has a PPP. Now, as Paul suggested, many public companies, this isn't going to apply to this audience, but many public companies and maybe other companies that weren't public that received the PPP program and later determined that they really didn't have a sufficient need, that they weren't being subject to serious economic challenges associated with post-COVID-19 economy. They may have returned those loans. And if they did return those loans, they can apply for the employee retention credits. There's also the Families First Coronavirus Response Act. I think that was talked about by one of the other speakers. In addition, the SBA has a number of debt relief packages that will enable employers to either defer or actually have the SBA pay the principal, interest, and fees of current loans that might be in place for a period of 6 months. In addition, there are Social Security tax deferrals that the company can take as well. So we really encourage all companies to be tuning in to the SBA site and alerting themselves on all the programs that are available. Next slide. So we believe that most companies right now are in a battle for survival. The post-COVID-19 economy hit is going to be huge. We believe that hundreds of thousands of small businesses are not going to make it, despite all of the federal stimulus programs that are being put in place. So this slide has a subset of our recommendations for small businesses to employ to significantly reduce their cash burn, because preserving your cash and your runway will help your company survive the post-COVID-19 economic battle. Most businesses' largest fixed cost is their payroll. And while the PPP program that we've been talking about today will help with some short-term relief, we believe that all businesses should be considering significant headcount adjustments, either temporary or permanent. Cutting all discretionary spending is paramount. And if you haven't done so already, we're recommending eliminating or deferring all discretionary spending for the next 6 months. Many companies have already cut their travel, their conferences, their in-person learning, and lots of other expenses associated with people working from home. We believe that after the recovery, that this learning is going to produce ongoing cost savings in the future and enable companies to continue to streamline through the remote working environment.